Happy Friday. Good morning. Guten Tag. Bonjour. Salam. Shalom. Kali. Is it Kali Mero? Um, Thanks for joining me. It is Friday, the 20th of October, 2023. It's 8:03 a.m. here in Chicago. This is episode number 2562. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I did forget to do something here. I forgot to create a slide to remind everyone that I'm off next week. This has been just an incredibly intense week, 2 weeks actually. Lots of coming in at 3 a.m. or 3:15 or 3:30 in the morning here in Chicago, preparing for a program that's going on at Convergent Trading, the accelerator program, and it's pretty intense. So next week I'm off, taking the family on a break, and then we'll be back in the saddle on October 30th. Reinvigorated, hopefully. So just be aware that that's happening. I don't remember if I said the disclaimer, so here it is. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. The Convergent Trading pre-market summary sheet. So we have risk-off sentiment this morning. No shock there following yesterday's pop and drop. We're seeing Europe getting pummeled a little bit in this morning. In terms of earnings, we got American Express among others. We're looking at Amex came out. Looks like they beat by 12.24%. Like I said yesterday, the high interest rate environment is very beneficial to financial firms. So Amex 12.2. They reported $3.30 a share versus $2.94. This is a NYSE stock. SLB came out and beat by a penny, and a couple others that I don't really care to mention here. Nothing major after the close. It is Friday after all. This morning, we got German PPI, which was pretty strong in favor of disinflation. Year on year came in at negative 0.2. Month on month came at negative 0.2 for Germany, the biggest economy in Europe, versus an expected rise of 0.4. So big flip for Germany there. PPI year on year is negative 14%, negative 14. This is the producer price index. This is the cost of inputs into manufactured goods. Came in at negative 14.7, was expected at negative 14.2. The prior is negative 12.6. Pretty significant. Retail sales in Great Britain came in pretty weak, negative 0.9 versus negative 0.2. Canadian retail sales came in a little bit higher ex autos, a little bit higher in general, month on month, negative 0.1 versus negative 0.3. And then we had ECB's McCall on at 8:30 Eastern. We have Fed's Harker speaking right now. And my news feed is not turned on. Fed's Harker. Then we have Fed's Mester. And then we get the Baker Hughes rig counts. Ugh, my neck. Very stressy. So that's where we stand. It is options expiration Friday. It is the third Friday of the month. These are monthly options, the big ones. There are options every day of the week. There are 0DTE options, all that stuff. But this is the big one, so be careful. Ongoing situation in the Middle East. U.S. Embassy tells citizens to leave Lebanon ASAP. And also, and also, it warns American citizens around the globe to be more vigilant. It's awesome. Fed's Chair Powell, strong economy may require further rate increases, but signals Fed may extend interest rate pause at next meeting. Therefore, no hike, probably. Yesterday's comments from Powell caused a lot of volatility, and they were bullish and bearish all at the same time. Fed's Bostic doesn't know if neutral rate has changed. It could be higher. OPEC sees no major impact from Venezuelan sanctions easing, with U.S. planning to refill its SPR. So, and then looking at the S&P, pretty balanced this morning. Let's verify that that's still the case. Yeah, pretty balanced this morning. Not much going on. Pretty quiet. Not looking great for the session, but who knows? Maybe we'll be surprised. And 97% of the inventory is short. 97% is below yesterday's close with 22 points of range, and the point of control shifting dramatically lower. And so very interesting there. Here's what was expected yesterday. Let me turn my camera off. This is what was expected yesterday. I don't know what I was doing in that image there. It looks like I'm trying to squeeze your face or twist your face. Who knows? So yesterday I was looking, we talked about the market has fallen out of balance on Wednesday and yesterday, very likely to make an attempt higher and to push lower. Overall, the expectation of a test of 16, 00, and 90. The interesting thing, especially for members of Convergent who've been part of these trade labs that have not gone so well, in that the market starts off extremely choppy, and then the actual real move occurs later in the session. What this requires of us traders is that, and I'm just being honest about the critique of my work here. I prefer to keep it real. What this requires of traders is to just be constantly vigilant and aware for the entire session. So open, test up towards the prior day's point of control, and then fall back towards the prior settlement. And then the expectation was we bust the 30 one area and then run to 16. Once we take out 16, I talked about 00, check the century figure, and then the big target becomes 90. Here's what actually happened yesterday. This is how it played out. Let's go to the active chart. Wow, my neck. Here's the active chart. So we open up. We fall down immediately. We consolidate for a good hour. Just consolidation city right here. And then we finally extend down looking for the continuation trade. Multiple bottoms there. Triggered a trade short, but didn't work out. And then it finally pushes the other way with Powell coming in, pulls back, pushes even higher, and then it just explodes to the downside and crosses again. So what we had is neutral reversal, reversal of the reversal of the neutral, and reversal of the reversal of the reversal of neutral. That's how awesome this structure was. So those who are betting on the neutral stat got crushed. Those who are scalping got crushed. Yesterday was really mainly a flow trade, not structural trades. Structure was very poor. So if you look at the profile here, you'll see huge disagreement, neutral, and then it finished neutral extreme down. Neutral extreme down. And neutral extreme down basically describes a very likely push lower overnight. Okay, and that's what we got. See, the overnight session pushed lower. We have a weak low on the overnight session. We have the DGPs for the session so far kind of colliding with each other. Full session mid, full session mid, full session VWAP, and the overnight point of control between 90 and 93 this morning. On relatively decent volume, 288,000 so far, well above the norm. So that's where we stand here, looking at the bigger picture. So we got down to 94 yesterday. 94, right? 94. We opened at 47. We pushed to 62, 60. What did we push to yesterday? Let me see. We pushed to 66 and a half. So we pushed to 66 and a half. We got to 94. And let's compare that with our plan. Our plan was to squeeze back, strong potential squeeze back to the point of control. There's your 64. And then it got to 94, 94.75, right? 94. I don't know why on this stream I do my numbers backwards. That's not how I write. Versus 90. So pretty decent, pretty decent plan. Pretty poor setups. And that's just the name of the game, and very strong indication we get more of the same today. So this is all about not committing errors, executing per plan, and so on and so forth. So that's what we've got for today. So let's take a look. Let's take a look at the overall picture. So the overall picture for the S&P, look at what we've done. We've balanced out quite a bit up here. We absolutely failed at taking the gap. The gap was, wow, what a way to write gap. The gap was 1850 to 46. We've talked about the gap quite a bit over the last week. It just absolutely failed to take that gap on Wednesday. Another really choppy day. And then we started to fall down. So yesterday and the day before, we knew that, was it Tuesday? It was Tuesday that we took out the gap. Yesterday and the day before, we knew that the market alignment and the market bias is short. Very clear, very clear. Market opening, testing the point of control, falling out of range. Very clear that it's just completely exhausted on the buy side. Buyers not able to hold prices up there. Same thing yesterday. Very clear to me that the attempts higher are very likely to fall and fail. One-time framing down triggered here. And we have taken out the 16, which was last Monday's low. We are now in the Friday non-farm payroll structure. And so the key levels down below here, where are we? The key levels down below. So above us from here, the price map says 4303. Okay. So above here, we have 03 settlement. Okay. Then we have the 1516. That brings us back to here, and in the single print right there, that's 1516. Man, very poor control of the mouse. Then we have 3032, which our key test is 3032. 3032 brings us back to the point of control, brings us back to the low of Wednesday. If it does not, if this is a key resistance area, if it does not hold, shorts are starting to be in trouble. And then from there, we have the 52.53. Okay, so that's the price map for this range. Above and then below where we are, we have the 81, which fills in the gap or the single prints. 81, 77, 66 beneath there, 66 beneath there, and then the low of 51. Those are the areas that I expect to interact. Still, you have OpX today, OpX impacting the overall picture. So OpX is kind of like triple witching. It introduces, there's just a ton, billions of dollars in option value expiring or being assigned today. And that requires hedges. The best market to hedge for your money has been futures, because that's the purpose of futures, is a hedge instrument. And so you're very likely to see impacts from that today. So that's my whole plan here. The primary scenario being open, make an attempt at the 03, try to push through, and then once it falls through, we're looking for 81, which takes out the overnight low, to 77, to 66, and that gives us the range, and that'll be scenario 1. Scenario 2 is open, try to push down into the overnight low. It would have to be a strong impulse up to get me interested on the buy side, consolidate at the 4,300 century figure, and then start to walk itself into the 16, the 15, 16. And if anything, given that we've moved 130 points or whatever it is from the high of 44, 28, is it up here? 22, 23, from 44.23 to 42.94, is almost 130 points. We're coming into Friday. We have geopolitical risk into the weekend with the escalation of the Middle East problem. More Lebanon is getting into it. They're still searching for an Iran connection. Great opportunity to go and remove some WMDs from Iran, maybe. Who knows? Sarcastic. Let's not get into politics here. But this is likely to get murky. And so a lot of this selling and the options that go with it are likely to need to be hedged today. Okay. So I need to leave. I'm not going to go over other markets. And again, I will not be here on Monday. I'll be on a ship somewhere. Good luck, and I'll catch you on Monday the 30th. Catch you there.